Okay, I will repeat. Sorry. So today it's Awesome 10x buying opportunities this October 2020. It's October 30. It is the end of the month, and you're watching a free Friday class pick. Do subscribe to the channel, smash the like button if you want to, and share to your friends. Now let's begin. The Awesome 10x is actually so our view is that we want to find awesome 10x opportunities. Sometimes we also want to share to you a lot of things, and one of which is what is our view with technical analysis and PE ratios. Maybe I would read this for you so that you can understand how Awesome 10x thinks. Brian Feroldi said Zoom, the forward PE ratio during July 2019 was 1,670. Currently, it's 158, and the stock is up 442% over this period. With that tweet alone, Brian Feroldi just simply said that PE ratios are useless unless you understand the companies that you're buying with. Similarly, people say technical analysis is useful. Take a look at this chart. Resistance, support, 1928 to 2020. If you are a long-term investor, the reality is technical analysis might not even be so useful to you unless you actually are, unless you're investing in the short term. It's kind of weird because I'm a charter market technician. I wanted you to know that whether PE ratios or technical analysis, useful or useless, of course, Brian Feroldi here in these posts, I don't take any offense, honestly. I don't take any offense. I find that it is actually agreeable. I'm agreeable. The fact that I don't use a lot of technical analysis in the manner that you probably might think that I am. So I want you to also know how Awesome 10x philosophies are. It is a little bit similar to how Jeff Bezos thinks. Jeff Bezos of Amazon said in his 2014 annual shareholder letter, you need to bet on ideas that have unlimited upside. A Dreamy business product has at least 4 characteristics. Customers love it. It can grow to a very large size. It has strong returns on capital. It is durable in time with the potential to endure for decades. When you find one of these, don't just swipe right, get married. The key takeaway here is that you have to be aggressive about placing bets on dreamy business ideas. You will have failures, but you will have to have sufficiently big winners, and those big winners will more than make up for all of your failed experiments. The challenge, of course, is that many relationships, particularly business ones, require bold moves to get going, and to find that through success, you have to commit for the long haul. The problem is that these moves don't just appear risky. Often they are very hard to rationally justify at all. So when Amazon invested in Prime, when Amazon invested in lending, in Recargable, in allowance, in Amazon Cash, Amazon Pay, all of these bets were all over the map, as well as, of course, the Amazon Assure, AWS, Amazon Web Services, Twitch. They failed in Amazon Kindle, or depends how you think about it. They also failed in Amazon Fire Phone and so forth. But when your risk tolerance is high, you can make bets all over the map. The reality is, an Awesome 10x portfolio is not necessarily a high risk tolerance, but our bets are all over the map because we find so many secular trends, so many unlimited upside opportunities. So at Amazon, they say that employees who have an idea are encouraged to pursue it, even if they have to upset traditional corporate rules to do it. Great innovations come from a large inventive team with a patient, pioneering, customer-obsessed culture, rather than from a small brain trust. If you're a junior employee at Amazon, you have an idea for some new way to delight customers, Bezos writes, you are just as encouraged to give it a try as a senior leader are. Experiments can start small. The downside of a small failed experiment is low, but the potential upside can be very high. How does Amazon and how does Awesome 10x think and invest in the same manner? We invest only 3% or 5% of our portfolio in any single idea. You do also know that the Awesome 10x system does not invest our entire money in the global stock market. We have a very simple guideline. An Awesome 10x investor has 25% cash in the bank, which earns 0, which is fine. 25% of their monthly savings or their annual tolerance savings that they're not going to use is going to be in the global stock market, meaning If they've got $10,000 extra money or just $2,500, then that's just the only amount that they should invest in a global market. Okay, the other 25% is to pay for a house eventually. So that means that let's assume that you have 100,000 pesos or $2,000, $500 cash, $500 in your global stocks, and then $500 in your potential house or condominium. And then $500 should be business or salary, which you will use for your daily expenses. So basically 25, 25, 25, 25. So that's just how it is. Meaning that we don't necessarily bet on all of our money into the stocks. I mean, that might seem simplistic to you, but most people think that just because we advise stock investing, they think that half of our money or maybe a lot of our money is invested in stocks. The answer couldn't be true. We actually, I teach people to just invest 1/4 or 25% of their net worth into global stock market, if possible. Of course, some people might want to save first for a cash. Some people might want to save first for a house. Whichever it is that you want to save for, I want them to also save money for global stocks. So that's 25%. Whatever amount you have, hopefully you are saving money for your global stock market. Jeff Bezos said, if your boss says no, ask your boss's boss. Meaning, he doesn't say no to dreamy ideas. And if you take a look at this, a decade ago, Google bought YouTube and it was the best deal ever. That was 2006. And this is now 2020, or actually 14 years after. So Google bought YouTube for $1.65 billion. That figure seems quaint now. Today, actually, people are saying that it is the best acquisition of all time. During that time, during that time, the YouTube acquisition was, I'll get some, wait. Hello, yeah, sorry, I just had to get a headset. So a decade ago, YouTube was actually bought for a whopping $1.65 billion. At that time, everyone considered that YouTube buy was one of the most expensive buyouts or acquisitions. And people even said, like Mark Cuban said, that the search giant was crazy to take on YouTube's many legal liabilities. And during that time, Google was said to be overpaying for YouTube. Today, actually, if you take a look, today, as in October 29, October 30, Alphabet stock popped as a company crushed expectations. We had Google, and of course, Alphabet made money through YouTube. If you take a look at the ad revenues of YouTube today, in just a single quarter, it was $5 billion. Meaning, when YouTube was paid $1.65 billion the last 14 years ago, in a single quarter, Alphabet paid for just 1/4 of whatever. 1/4 of 30 days is like 7 days or a week. So Google paid for 7 days revenues of YouTube. That was just how cheap they bought for YouTube. So of course, initially 15 years ago, you wouldn't really think about this. That is what, but I have to applaud Alphabet, aka Larry Page, Sergey Brin, and Eric Schmidt. And that's really how Awesome10x wants you to think. You have to think of things. It could be moonshot ideas, it could be dreamy businesses, but I also want you to really think about investing in the realm of thinking home runs. For instance, Brian Feroldi, again, I'm going to quote him because I really like some of his tweets. Do follow him on Twitter. Brian Feroldi said that $1,000 invested in 2010 is currently worth 191 in X. I don't even know what that X is. GE is 691. ExxonMobil is $713. But think about it. If you invested $1,000 in Coca-Cola, you'd have just doubled your money, 2,445 after 10 years. $1,000 in S&P would be $3,779. In the NASDAQ, it would be $6,844. Invested in Microsoft, it would be about $8,875. Amazon, $23,000. Tesla, it would have been $88,000. The point here is that if you will keep on investing in the Coca-Colas of the world, no matter if we think about the 10 years time, you'll never be 44 times richer. Now, what I'm saying is that most people are always telling you to invest thinking about singles, but the reality is Awesome10x wants you to think about home runs. Why should you diversify? Because chances are in 20 bets, just like Amazon does, not all of it will pan out. Just like Google does when they acquire, not all of it will pan out. However, if you find a home run, all you got to do is hold on to that winner, because that winner could erase all of your losses. And even if you diversify appropriately, diversify meaning spread on about 20, 30, 40 bets, you'd actually get a higher return rather than just getting a double of your money in the next 10 years. Similarly, SPAC IPOs this year have spiked in 2020. So this year, the number of SPAC IPOs have actually gone from about 58 to 140 IPOs. That's a lot of SPACs. So why is it that there are so many SPACs? CB Insights said that these are the benefits for companies. The reason why companies want a SPAC is that it's certain, there's speed, strategic partnership, and there's a lot of benefits for investors and sponsors. Easy access to capital, significant upside. Now, what is a SPAC? The thing about SPAC is that these are, so the people who aren't aware of SPACs, if this is your first time, SPAC means Special Purpose Acquisition Corporations. These are companies that are blank checkbooks. They have nothing today, but they've got a sponsor, and that sponsor would acquire a new company. It is like an IPO. So an example of a SPAC would be Tattooed Chef, also known as FMCI. This company is your next Beyond Meat. It is a $400 million company. So it went from 10, it rallied to as high as 30. We got in at about 12, 14, 17, sold at 26. Today at $17.50, I would think that this is a buy. So at $17.50, the lowest price that this could go is likely $14. Put it on your watch list. This is an Awesome10x buying opportunity. Tattooed Chef. The next SPAC is Novs. Novus Capital is indoor farming. For those who aren't aware, Novus sponsor is Martha Stewart. Jonathan Webb is the CEO. And they do have plans to actually open a facility in the entire Kentucky to serve your Walmarts, your Krogers, your Amazons, fresh tomatoes, lettuce, and using the technology of Holland, Denmark. So the food valley of the world is actually that small country, which is the Netherlands. And it's not just about windmills. They actually have the highest technology. And if you actually check just a simple Google search, they actually export to the entire world, the second largest, even if they have 250 times smaller footprint than the USA. It is the agriculture valley of the world. So, of course, they do indoor farming, and that indoor farming is incorporated by Knobs, aka App Harvest. So there's a company that I could see can make that 10x move. Another 10x move, in my view, is a SPAC called LOAK, also known as Danimer Scientific. Danimer Scientific is biodegradable plastics. We got in at about 10.30. It went as high as 12. Today it's trading at about 10.7. Maybe you could buy it at 10.7. Maybe it could even go to $10. This is a company that can grow higher to about 10x. Who are their current clients? Their current clients are Pepsi. Their current clients are Nestle. Why is Nestle and Pepsi and a lot of other big liquor companies partner with them? Because your Lay's potato chips wouldn't become a pet plastic. It's not going to be PET. It's going to be PLA and PHA plastics. So these biodegradable plastics will not take 350 years to rot in the ocean. So the thing about them is that they could actually biodegrade in about 57 days. So with the world, of course, needing to preserve our wildlife, your oceans have to be clean. Chances are more and more companies, not just your Nestle's and not just your Pepsi's, would be using biodegradable plastics. And that actually is a huge upside for LOAK. Ticker symbol LOAK. Danimer Scientific. The next SPAC that we're going to discuss with a 10x idea, 10x opportunity, and execution will be FEAC, also known as Skills. It's mobile games at 11. So you can buy it at 11. You can probably get in at 10. Why do we think it costs $20 or so forth? If you take a look at the monetization of Flying Eagle acquisition, also known as Skills, they've got $6 of $6 monetization per user versus the typical $1.50 of a Zynga, which is half the price of market cap. So there's significant, if I'm wrong that it's not a 10x, at the very least, this is a 2x or 3x move. The next company that you should be aware of is TRNE, also known as Desktop Metal, Trine Acquisition. This company's secular trend is additive manufacturing. For those who aren't in the know, Trine Acquisition, also known as TRNE, the CEO is Rick Fulop, and he's got a team of MIT professors. They're actually the leaders of 3D printing. Now, the thing about 3D printing is that this is an age-old, decade already business, but this is already additive manufacturing. Who are their current clients? They've got, if my memory is correct, they've got some cars like BMW as a client. They also have Adidas for additive manufactured soles. So like the sneakers and the rubber shoes are also made through 3D printing. Not just that, a lot of people have seen that 3D printing can have 100 times speed, which makes it 10 times cheaper cost. So with that secular trend, we think that TRNE can win. And so this one deserves a spot in your portfolio. The other SPAC that we're going to discuss is SBE, also known as ChargePoint. Here we got in at about 10, 11, 12, even as high as 14. Today's price at about $13.60. Do take advantage of any drops on SBE. For those who aren't in the know, SBE is the monopoly of charging stations around not just America, but actually around the world. In many countries, charging point is already there. They've got plans to be 2.5 million charging stations from current 200,000. I think their current charging station is 100,000. Compared to Tesla's charging station, compared to Blink BLNK charging stations, SBE is far away the number one, and the valuation of SBE is nowhere in the realm of expensive. This is a 10x company. The other SPAC is that's interesting to me is LiDAR company, which is GMHI. For those who aren't aware, GMHI, also known as Goris Metropolis, will have LAZR. It's going to be ticker symbol laser. The founder is Austin Russell. He was actually a Peter Thiel Fellowship graduate. He dropped out when he was like something like 15, 16 years old. He dropped out of 16 away from Stanford so that he could continue his passion. And that passion is actually to ensure that the cars that you will sit in will be very safe. So currently, Laser, or also known as GMHI, can be bought at $10. We think that this one is going to go back to 13 or even go $50 someday. It is a 10x move. GMHI will have a lot of cars. They already have 2 cars as a client. If you study it correctly, I think it's Volvo. If my memory is correct, I can remember if it's Volvo and another car. We did a deep dive on this. So all of the SPACs that I'm telling you about right now in the Free Friday class pick was already done deep dives inside our inner circle classes. So there. Another company that I think is a good 10x move is actually Tobii. This is a Swedish company. Tobii eye tracking trades in Stockholm, Sweden. So this isn't in the US, but you can actually avail for it in Swedish kroner. So 44 Swedish kroner is actually $4 in US because it's times 0.11. So with Swedish kroner, you can access all of these Swedish companies in interactive brokers as well. This company had a bad earnings report yesterday. I haven't read specifically the earnings report. However, I could tell you that from 24 to 68, that was a resistance at 68. This level back to 44 brings us back to about 2019 median area. Why do I like Tobii? Because eye tracking is not just applicable for gaming. I do see several use cases also in healthcare breakthroughs, as well as medical and medical use cases. We already made a deep dive on this. You can actually check all the companies that I shared today inside the inner circle. If you go awesome10x.com, check out all these companies for a deep dive. Another 5G reversal play is Nokia. Nokia had a bad earnings report last night, 20% down. if this is the first time you're listening to this report, Nokia 330, in my view, is making a reversal play. It's a value play. I think that this one goes $6.650, even go $8. While it might not be a 10x move, I do think that for those who aren't in the know, Huawei, Ericsson, and 5G, Ericsson and Nokia are winning the 5G race. Chinese companies are using, of course, Huawei, but companies like sometimes it's Belgium or sometimes it's Singapore, they are using either an Ericsson or a Nokia. Now, you might ask, why did Nokia go down 20% after earnings? I took a look at the earnings report of Nokia. The reason why it fell 20% last night had nothing to do with them not making anything from their revenues. The reality is, for those who aren't in the know, Nokia is the 20% market share in the world to help companies do 5G. And the reason why it dropped was because it didn't win one contract. They lost to Samsung for a 5G contract with Verizon. Nonetheless, please understand that this one is it's in a 5-year to 10-year secular move, and Ericsson and Nokia are your top three other than Huawei in the realm of 5G race. So this one is something that you have to check out. Technicals will tell you that this is actually an inverse head and shoulders. 330 has a very limited downside. If I'm wrong, it goes $2.50. Honestly speaking, I think this one goes back to 4 or 5 in the next couple of days or weeks or months. Another SPAC, LiDAR. People are asking, well, do you still believe in Velodyne LiDAR? I do think that it's a yes. Velodyne LiDAR, we bought at 13, we sold at 24. It even reached us $30. Some of us managed to sell at $13, $30. And right now, this dropped from about $30 back to $13. Even if you've bought somewhere at about 16 or even as high as 18, I do think that this company will still continue to go higher. For those who aren't in the know, almost all the cars in production today, whether it be electric vehicle or any self-driving vehicle, would need a Velodyne LiDAR for just that car to be safe and to see. So in my view, both GMHI and VLDR, both of them have a place in the world, especially if you're thinking 10x moves. So these are really 10x ideas, and it's a SPAC that I would put in the portfolio nonetheless. If you have it, keep it. If you don't have it, might as well have it. Content delivery network plays. So Limelight actually surprised on the downside. I bought it at about $5, $5.70. I sold it at $6.30 prior to earnings. The top was about $7. I was scared of the earnings report of Limelight, so I sold before that earnings drop. So Limelight had an earnings front that was worse than expected. However, in my view, here at about $3.70, most of the downside is priced in. We're getting it at the resistance of 2019, which was about October. Take note that from $3, it rallied to $3.70 and went up as high as $10. In my view, both Fastly and Limelight are actually a good buying opportunity. So Limelight here at $3.70, I would buy. I wouldn't care much if it doesn't go $6, $7. Yes, there will be resistances here at $5. However, I do think that $3.70 to $5 still presents a huge upside. This might not be a 10x name, but I think that this could be a 1x move. At the very least, 50% to 100%. Another value play that I think about is Fastly. So Fastly's clients are, of course, your Shopify. People are dismayed that Fastly lost on TikTok. Nonetheless, I don't have a chart here of Fastly yet. Wait, I'm going to show to you the Fastly chart. Fastly chart right now is trading at $68. And I think that is a buying opportunity. FSLY. So FSLY would also be in the buying opportunity this month. So as you could see, there's a lot of buying opportunities this month. For those who aren't aware, Fastly went somewhere from about $10. Its low this year was $10. The high was $136. So it's roughly in the 50% mark here at below $70. So at 68 all the way to $60, I do think that this content delivery network has a 10x secular trend. Why? Because all of you will need your live streaming at a fast pace and you need broadband speeds for your mobile. All of that is catered to you by Fastly. So whether you're using your Shopify on the web or on mobile, Fastly profits from there. So it's a buy reco for me, Fastly and Limelight. Let's take a look more on more 10x companies this month. fuel cell place, Bloom Energy. For some of you, Bloom Energy may be a company that you know or you don't know. Bloom Energy does not make money in the last how many years? It went IPO in the last 3 years, 2018, at about $15, fell down to about $5. It even fell as low as $2.8. This year, from about $2.8, it managed to rise to $22. The drop at $14 to me is just normal. So in my view, this one is a keep. If you don't have Bloom Energy, I think that at 14 until 12 is actually a buying area. The Bloom Energy will actually benefit on a Biden win. So all the beneficiaries of alternative energy, we will believe that not just solar will win, but also fuel cell plays, whether it be Bloom Energy, Plug Power, or F Cell, or even the Ballard. So initially, I've never bought Bloom Energy because it doesn't make money. However, in my view, subsidies would actually encourage people to actually use Bloom Energy. These are off the grid boxes and power plants that use fuel cells. So this NASA scientist will actually win in the long run. So this is a dreamy idea that I believe will win. So BE at 14 is a buy. There's also upcoming startups that I haven't studied, but I will read this for you. Healthcare direct to consumer startup HIMS recently announced that it would go into a public SPAC called by Oaktree Capital Management. For those who aren't aware, Oaktree is actually Howard Marks. So we have always expected and prepared for an IPO, but there are a lot of dynamics in the new group of SPACs. There's greater speed and certainty of the deal, helps the team stay focused, and we get to partner with an amazing investor, aka sponsor like Howard Marks. So about Hims and Hers, this is a company that is a SPAC that I would try to understand. That I would try to understand. So Hims and Hers is a multi-specialty telehealth platform connecting consumers to licensed healthcare professionals, enabling them to access high-quality medical care for numerous conditions related to primary care, mental health, sexual health, dermatology, and more. So this is a telehealth play. I haven't studied this intently. However, they've got more than 50,000 customers already. They will list with approximate value of $1.6 billion, ticker symbol OAC. You might wish to put this in your watch list. OAC. So I haven't studied this, but this is a telehealth play. Other 10x moves in my view would be cannabis names like Hexo and Grow Generation. Grow Generation, I discussed it here at $9. Today, Grow Generation trades at about $16. Hexo at 70 cents looks to me a buy opportunity as well. Pandemic reopening, these are not 10x moves. However, these are currently a potential 1x move. Let me share to you all the charts of those names. Cannabis, Hexo, and GRWG first. Okay. Hexo right now trades at 72 cents. It has been sleeping for the last how many months? But when you take a look at the earnings of Hexo, they've been doing well and they're also expanding in Israel. Medical cannabis is likely to be a bigger and bigger movement, especially with cannabidiol. So they've got the money and we've studied that they do have great numbers. They would be break even come next year, 2021. So this is a company that could shoot up again next 6 months. So take a look at Hexo, also Grow Generation. Grow Generation is a company that is very small right now. It's just $100 million. It's just $800 million. Revenues are still small. As you could see, the sales are $100 million, $120 million. The beautiful thing about Grow Generation is that not only have they been growing independently as a Home Depot of plants and organics and all those types of grow-related plants, they have added 2 hydroponic depots. So Grow Generation is not just a cannabis play. It's actually, you could argue it's an agriculture play because there's a lot more plantitos and plantitas around the world. That is evident whether you're looking at Scott Miracle Grow, at nutrients, if you take a look at most of the company earnings in the plants, especially the largest would be SMG, Scott's Miracle Grow, you could see that there is a huge trend. The pandemic actually made many people do agriculture, whether they're planting tomatoes or lettuce at home. So it's evident from SMG, agriculture inputs. The growth was like 100 to 200%, and we expect that to continue. Grow generation benefits from that. And the highest cash crop for now is cannabis, actually. So hemp. So we do think that grow generation is a 10x move. Another play would be pandemic reopening, Funko, Disney, and QSR. So Funko is trading at $6.50. We think that this company would benefit on the reopening, especially since FNKO, the IPO of Funko was about $8 since 2016? Sorry, 2018. So this is actually trading below IPO. And we think that this one has a capacity to at least even trade at $10. So if we're wrong that it's not this might not be a 10x move, but this is actually a reopening play move. So the more people would actually buy their Disney plush dolls, or in this case, Funko actually also sells not just toys, but also board games and clothing line and so forth. So loungewear, if you recall, Funko bought Loungefly, and we think that there will be more upcoming products. Plus, it's actually trading like less than, this one is trading less than 1/3 price to sales. So this is more a price to sales ratio play. Sales are $670 million. Market cap is 285. We do think that this company is actually undervalued at current levels. Funko, Disney, and QSR. QSR, for those who aren't in the know, is of course the owner of your Burger King, Popeyes, and Tim Hortons. At $53, it's the same price at 2017, 2018. We do think that QSR, Burger King actually had a very good marketing. QSR actually did well in their Impossible Whopper introduction limits last year, which made it go from $50 to $80. This drop of $30, while that was exaggerated, actually rallied back to 53. This one is actually, it could go $50, but we think that this one will be flat and then continue upward. So it's not a 10x move, but QSR, Funko, and Disney could give you 1x. What else? Polish video games. So Polish video games, specifically CD Projekt, Bloober, and Creepy Jar. These are 10x moves. So a lot of the fans of CD Projekt actually was saddened by the delay of Cyberpunk 2077. Take note that during the pandemic, this was $220, 220 Polish zloty, went to 450. Now it's about 350. This one, in my view, could go down to 300, but this is already a buying area. So anywhere from 360 all the way to 300 is a buying area. I don't think it goes 200 Polish zloty. So put this in your buy list as well. Creepy Jar is trading at about 996 right now. Wait up. This is Creepy Jar. So this is from Poland. Went from about 130 to 1,390. 10x move in just 6 months, March till July. So actually 4 months. Wait up. This one, Creepy Jar, in my view, will actually consolidate from about 900 all the way to about 764. But even at current levels of 966, we expect this as a buy. Why do we like Creepy Jar? Creepy Jar's developers are the ones who are doing Green Hell, and Green Hell is doing well, that game. And then, of course, the videos that you can actually check more of Creepy Jar on their own website. The other Polish video game that we like is Bloober. Bloober also gets a buy from us here at 144. So these three Polish games we expect will give you a 10x move. Maybe CD Projekt will not give you a 10x move, maybe just a 1x move. But for Creepy Jar and Bloober, this one gives us, we want you to buy them. 145 and the other one, 966. Put this on your buy list. Microgrids, so Clean Spark also is part of our buy list this October. We think that people are over exaggerating about the offering. Take note that Clean Spark fell to as low as $9 and even exaggerated down to $7 because of an equity offering. CLSK went somewhere from $2 to $14 because because of course their revenues went from 1 million to 5 million and is expected to grow to $40 million in the next 5 years. You can actually study more of this company. CleanSpark actually is in my view trading today at about $7 to $8. You might see people selling here at about $10. Those who got surprised with that equity offering. However, I think that CLSK will go from $7 to about $20 someday. Reason being, there's a lot of partnerships. For those who aren't aware, CleanSpark and Tesla actually have a partnership together. And I believe that microgrids as a group is actually a secular trend. So actually, the buying opportunities this October 2020 are a lot. So let me repeat those things again. I'm early. It's just 6 to 11. So yeah, those are my buy opportunities. And I want you to actually check out our website. This will be my website, Awesome10x.com. Check back into our analysis. I know that I didn't analyze to you why we like these companies. It's as if I just really shared the stocks that you would buy for the month of October 30, 2020 at those levels. But I'll be willing for you to actually scorecard me next 6 months or next 2 months about these picks. So we'll write it all down. Let me write it down. Today, October 30, 2020, we're gonna buy these SPACs. Let's buy it all. CleanSpark 7. What else? CD Project at current price is about 350. You're gonna buy CRJ, Creepy Jar at 966. You're gonna buy Bluebird at about 144. These are in Polish zloty. Buy Toby, that's about 44 SEK. Also buy Pandemic Reopenings, Funko 6.5, Disney 119, QSR 53. What else? Cannabis names, yeah, Hexo 72 cents. GRWG $16.50. Let me see GRWG right now. GRWG trades at about $17 right now. Even at $17, I'll be willing to buy. So yeah, let's buy it today. $17.18. So actually, I'm not very, I don't really mind if you need to pay $7 or $7.50. Even at $7, even at $8, I pretty much don't mind. So these are the companies that you can buy. All of these can be bought tonight, market price. So these are all buys tonight. Wait. Wait up. So the SPACs, yes, OAC at $10.20, NOVs 11, TRNE. How much are the prices right now? B at 14. BE at 14. Actually, I'll be willing to buy Epsol at 2 as well. Fastly at 68. LLNW at 3.7. TTCF at $17.50. SBE at 13.5. VLDR and GMHI, it's still a buy at 10.2. How much is it? $13. Yeah. So how many companies are these today? Look, yeah, I want to buy Look as well. Tireni at 10.3. Wait up, guys. Look at 10.8. So these companies, how many companies did I mention today? These are a lot. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 names for you to buy for the day. All right. I think that plug power at $14 is a little bit high, but if plug power goes about $10, I'll be willing to buy it. How much is it right now? Plug right now trades at 14, right? It's trading at 14.8. Now, Plug, the reason why Plug is very strong is that it already has partners like Walmart, if I haven't forgotten. I think like plug actually is stronger, but I would prefer hopefully to get an entry near 10 to 12. So yeah, it's not a sell to me, but I'm just like trying to be very cheapskate. Amwell telehealth play. I think the 25 I'll be willing to buy this. Try to wait if this one goes down 25 below. The IPO of Amwell was $18. There's a lot of companies that you could actually buy. When you saw IPO $19 below, I'm also willing to buy. So let's put that in our buy list as well. Mini saw 19. So okay, so I'll be willing for you to actually look back on October 30 whether these picks would actually pan out and give you a great return. So buy all of these companies, put like 1 to 2% or 3% of your portfolio in all of these companies. Try to post these names. Let's see if you will get a good return. Just buy and hold these names. Watch it again after 6 months or maybe like next 2 months. So yeah, there. Thank you very much. And that ends today's Awesome